The next step would typically be, we imagine we got the teacups, they came in, we open it up, they have the bill inside it, the teacups match what we ordered on the purchase order, everything looks good. So now we're just gonna copy the purchase order over to a bill. So I'll just say copy it to a bill. I'm gonna close this out. And then, so now we have the vendor being populated. The bill date is today's date. The due date is going to be, we could enter the due date of the bill, which in this case, the terms might be useful. So when we got it, we're going to say the bill is going to be due on 10 days, net 10, which would be 1/12. And the bill number, if we have one, tags, we're not going to order. Notice that down here, we're not using the category this time, which is the major thing we used last time. Category, assign it to a specific account, a general ledger account, like utilities, telephone, or possibly to an asset account like equipment. But we're using instead the inventory item, which is populating automatically for the item that we purchased. Now, because it's an inventory item, we would suspect that the item is driving to the category or account of inventory, an asset, instead of an expense, like telephone expense. But not only that, it's also going to record the subledger for inventory, which will help us to track the inventory not only by dollar amount, but by unit, because we're using a perpetual inventory system, entering the inventory by unit as we buy it here. So there's going to be the 150, and so it's a bill. Let's go ahead and save and close that. We've seen the bill before, but we'll check it out again. Let's save it and close it. And we go boom. So now we've got the detail in here. We've got the bill and the purchase order. So if I go back into the purchase order, notice that we have this link up top telling us, hey, look, there's been a link to it. You used the purchase order to create a bill. So if I go into it, we could see there's the bill, and I can actually link over here. So that's the cool thing about a database program, is it allows you, these forms can be linked together. So when you see the flow here on the bill, also, I see that we have a link to the purchase order. I can select that link and go back to the purchase order. So that's super cool. I can close this out. And so there's the bill, and then here is the purchase order. Let's go back on over to this side on the expenses. And then note now that when I look at the purchase orders, I look at the ones that are open. That one is no longer here, right? Because it's been closed. If I go to the filters and I look for the closed purchase orders, it's now been moved to the closed items. There it is. If I go into it, you can see now the status has changed to closed automatically because I used it to create the purchase order, to create the bill. If you create a bill without doing that link, then you want to make sure that you go into the purchase order and mark it off as closed to show that it's now closed. You can also run reports by open purchase orders as well. So if you wanted to deal with like external users or something, or run reports for an auditor, you could go into your reports and have like purchase order list, open purchase order detail possibly. And so now you've got your purchase order information, and they're no longer open anymore, but you've got those reports as well. But normally internally, you'll be in the expenses area and looking within here. All right, let's check out what we recorded when we actually recorded the bill by going to the balance sheet. I'm going to run the report, and I'm going to go down into the liability side. So we had the accounts payable. It was in the 2025 area. So I'm going to go into this data, drilling back down to the source document. We entered the bill that we created from the purchase order, and we can see the full name here. The other side's going to inventory, we can see. So then if I go into this one, that'll take us, of course, into the actual bill. And there's the bill once again. Muy bien. Let's close this back out. Let's go back up top to our report. The other side's not on the income statement. Where would it go if we put inventory to the income statement? It would go to cost of goods sold. But why don't we put it there yet? Because we haven't yet sold it. It's currently on the books as an asset. Therefore, we have to deal with this accrual component, having it on the books as an asset. Remembering that, of course, the purchase order, if you have to deal with them, as well as inventory, are forms that you can't just integrate and do with the bank feeds, because there's no cash involved until we actually pay the bill, right? So, but in any case, if I go into this inventory, so there's the bill that's increasing the inventory. That's great, but this is only increasing it by dollar amount. I also want to check out the flow of inventory by units, so I can track and make sure that people aren't stealing my inventory, because I have to use some kind of flow assumption, first in, first out, last in, first out, combined with that FIFO, and FAFO. I use a first in, first out, and an F around and find out inventory strategy. That second one, again, it's controversial. It's not in the book, in the textbooks, but that's how if you really want to not have people steal it, that's how you have to do it. So I'm going to go to the reports on the left-hand side, and then release the hounds. Release the hounds. I'm going to type in inventory. Let's go to the inventory valuation summary. All right, we'll close up the ham boogie up top, and let's change this. I'm just going to change it to the end of the year, 12/31/25, and then run it. All right, so there we have it. So now we've got the inventory items here, and then here's the new inventory item that we set up. These are categories. We'll talk more about how to set this up in when we set up a new company file. But here's the 2 units of inventory, and the dollar amount is at the 150. So we have a total of $746. So this amount should tie out to what's on the balance sheet for inventory, $746.25, but also give us the units. Now, just a quick reminder that when we looked at the subledger for accounts payable or accounts receivable and accounts payable, these two QuickBooks will kind of force the subledger, breaking out these items by customer and vendor respectively for accounts receivable and accounts payable, because every time we post something to these accounts, it'll force us to use a customer or vendor, and that'll force the system to have a subledger that ties out. That's not the case for inventory. If I don't use the proper inventory items, QuickBooks will allow me to post something to the inventory account without assigning an item, which sometimes you would do because you might be using a periodic inventory system rather than a perpetual inventory system, tracking inventory not within QuickBooks as per units like this, but rather tracking it outside and making a periodic adjustment. So that means if you are using the subledger within QuickBooks, you got to be careful and make sure that every time that your total here should tie out to what's on the balance sheet, because if it doesn't, something went wrong. Something got posted to inventory that didn't have an item assigned to it, and you can't track it by units, and your system will be messed up and you won't know what's going on. And if you can't see how many units of inventory that ties out to the dollar amount of inventory, you can't apply from the first in, first out method, the FIFO, then you won't be able to apply the FAFO, F around and find out strategy as effectively, because you'll be confused. You have to know what's going on before you take action, before you release the hounds. All right, anyways. That's going to be that's the general thing with the purchase order. So the purchase order vendor side, we have the request. It's the request for inventory, doesn't actually record anything, only is going to be used for businesses that have inventory. And then again, even still, you might not use the purchase order. So as a bookkeeper, you want to be thinking about what clients you're taking on and where you can specialize in.